Hello, welcome back to Financial Accounting Info. In this video, we want to look at a question paper and we're going to look at the multiple choice section. So we are going to look at question 1 on this question paper. So going down, you see that we are going to start on question 1, which reads various options are given as possible answers to the following questions. Choose the correct answer and write only the letter A to D next to the question number. That is 1.1.1 up to 1.1.5 in the answer book. The 1.1, the following totals amongst others were extracted from the Science journals of ARCA booksellers for May 2014. For employee, Miss Z Zahara. So we are given a list there in terms of the annual salary notch, and then we are given the monthly employee deductions, and also we are given the monthly employer's contributions. So going down to that on this question, which is 1.1.1, the payee deduction will be. So we need to calculate the payee deduction, but the instruction of the calculation is here, whereby it's saying 25%, 25% of gross monthly salary after pension fund deduction. So obviously we need to subtract pension fund, and then we subtract it from the figure for the gross salary, which is the gross monthly salary, and then the net figure that we get now, we now say 20% of that, 25% of that figure. So basically we are saying we are given the annual salary, which is 222,000. So remember, this is an annual one, which means it's for 12 months. So we need to calculate the monthly one. So calculate the monthly one, we say 222, we divide by 12. And obviously you are going to get the monthly figure there. So let's try to calculate, say 222,000, and then we divide by 12. Then the answer that we are going to get is 18,500. So here we are saying we have got our 18,500. And then from this 18,500, you now deduct our pension fund, which pension fund we given it as 1,500 here. So we say minus 1,500. Then the net figure that we are going to get is 17,000. So for this 17,000, that's the figure that we are going to say 25%. So 25% is 25 over 100. Then we multiply by 17,000 over 1. Try to calculate it as such. We are now saying 0.25, which is 25%, times our 17,000. And then you are going to get your 4,250. So your final answer becomes 4,250, which we are using in B. So B is the correct answer that we have there. So go to the next question. Going down to the next question, you see that it reads the monthly contribution of the employer for the pension fund will be. Then we go to the instruction of calculating the monthly contribution of employer. But in terms of employer contributions, we are given them here. So we are saying, so remember the question is saying the monthly contribution for the employer. So we are given the monthly employer contribution whereby pension fund is here, saying 60% of employee contribution. So the contribution by the employee, we calculate 60%. We calculate 60%. So let's just try to clear some space so that we can be able to calculate. So we are saying, we have our employee for pension fund is 1,500 here. So we are saying 60%. So 60% is 0.6 as a decimal multiplied by 1,500. And you see what we get there. So 0.6 times 1,500. And you'll be going to get your 900. So if you check there, you see that we have a figure for 900. So 900 is the figure that we want, which is here on A. So A is the correct answer. Then you go to 1.1.3. The employer's monthly contribution to the medical aid will be the employer's monthly contribution to the medical aid. So our medical aid, they are saying run for run basis. So run for run basis, which means the same figure that we are using for the employee is also for the employer, of which for the employee, we are given the medical aid fund is 350. So it's the same that we will apply for the employer, 350. So we come here, you see that the answer that we are going to indicate there is 350, which is on D. And then we try to see what else can we have. This is the last question on this page, so you can move on to the next page where you're saying 1.4, which is a check dated 1 May 2014 amounting to this will be issued to the Department of Labor in respect of UIF. So UIF for the to calculate the UIF now. If you go there, you'll see that we go to the instruction of the UIF. All right, our UIF, it's we're given it as for the employer is given a 0.1% of gross monthly salary there. So let's according to the information that we're given, let's try to see. UIF for the employer, we're given instruction here 60% of employee UIF, sorry, it's here. We're saying 0.1% of gross monthly salary. So if you check the gross monthly salary, remember we said 222 divided by 12 to get the monthly salary, getting this 222, and then you divide by 12, and you see what you get there, 222,000, and then you divide by 12. You're going to get your 18,500. So basically, you get your 18,500, which is the gross per month, and then you calculate with the 0.1%, and try to see what figure do you get there. You see that the UIF that we are given for the employer is 1% of gross monthly salary, which we convert to a decimal becomes 0.01. Then we multiply by 18,500, which is going to be 185. So this is for the employer. And then for the employee, we're given it as 100. So total will be now 185 plus 100, whereby you are given 285. So then the figure that we're going to indicate there is 285. And you see that we have got here at A. This correct answer. Then we go to 1.1.5. Net monthly salary payable to Miss Zahara will be. So obviously, to get the net monthly salary, we're going to say gross salary minus total deductions. So basically, the gross salary we have it, remember, we put it as 18,500. 18,500. And then we subtract the total deduction figure, which we are going to find out there. So total deductions. Let's just try to see. Right, on total deductions, we are saying we are going to say the figure that we got for. We are going to use our pension fund. We have it 1,000. Then we add the 350 for medical aid, and then for SARS pay, you calculate it and got 4,250. And then for UIF, we have it there, it's 100. So if you add there, you get your total deductions. So you add there, you're supposed to get your 6,200. So we are now saying 6,200, then you subtract from the gross salary which we have there. So you're saying 18,500 minus 6,200, which is our total deductions. So we calculate it there. And say 18,500, so then you subtract 6,200. We are going to get your 12,300. So we are going to get your 12,300. So if you check there, according to the answer that we are having it as B. So B is correct answer that we have. Then you can go to the next question, which is now 1.2, which reads the owner of Designers Cross Corporation had taken clothing valued in 2006 from the business for his personal use. Stock taking is conducted as per the perpetual system. Remember, if we take goods for personal use is drawings, so obviously we are going to debit our drawings. So then we've got A and B debit drawings, and then we are given a hint that the owner is using perpetual system. So remember, when we are using the perpetual system, we are going to open the traded stock account. And when you use the periodic, that's when you open the purchase account. So in this case, we are going to debit drawings and credit traded stock account, which is going to be A. So A is the correct answer that we have there. Then 1.3, The total amount of the creditors control column in the creditors journal will be posted to. Let's just try to see. Obviously, it will be the credit side of the creditors control. The credit side of credit control is on B. So 1.3, our answer is on B. In 1.4, Miss Arariana, a data, made a direct deposit of 4,500 into the current bank account of the business. Favorable bank balance in brackets. The source document for the above mentioned entry is whenever we have a transaction passing through the bank, obviously they will be summarized on the bank statement. So the bank statement becomes the source document. So you've got C as the correct answer there. So this is the last question that we have according to the multiple choice questions that we have on this question paper. Let's check in for more videos to come. More typical examination questions are going to come. So we'll meet again in the next video. That's for this video. I'm signing out.